Hey everyone, we got some huge news for Rivian stock investors that you're not going to want to miss. So in this video, I'm going to review those latest developments and what it could mean for Rivian stock investors. So let's jump right into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Rivian informed investors that for the full year in 2023, they produced 57,200 vehicles, which was above their guidance of 50,000 vehicles and more than double 2022 production. However, the total gross profit was negative 606 million. Gross profit per vehicle delivered was approximately negative 43,000. That means on each car that they sell, they're losing $43,000. That's not even including sales and marketing and corporate headquarters spending and research and development costs. That's leading to even more losses on the bottom line. Can you imagine that? For each car, $43,000 they're losing. That means they need to price their cars at least this much more in order to break even just on each car sold. And then they're still going to lose money because they still need to spend money on management. They still need to spend money on marketing. They still need to spend money on research and development and on and on. So that being said, I think we're going to see a little bit later in the video, management did say that in the fourth quarter of 2024, they are going to be gross profit positive. So that's a huge bridge to cross, going from losing 43,000 on each car to going to being positive. And remember, their cars sell on average between $70,000 and $80,000, you can say. And so that's going to be a big bridge to cross, but management said they're going to be able to do it. So that's going to be something interesting to look out for, and that's something that I'll definitely be updating you all on as the company makes progress throughout 2024 on that big goal. So during the fourth quarter, they also delivered a higher proportion of consumer vehicles due to Amazon's expected seasonality. For context, the proportion of our total revenue attributed to Amazon was 8% in Q4 2023 versus 30% in Q3 2023. If you're not already aware, Rivian has a deal with Amazon, and Amazon is a major investor in Rivian, where Amazon has ordered 100,000 electric delivery vans from Rivian. And so every quarter, Rivian is delivering a certain amount of those vans to Amazon, and it looks like the fourth quarter is the quarter where it does not deliver a lot of those vans. Amazon does not want to receive those in the fourth quarter, probably because they're busy. That's their busiest shipping season during the holidays, and they don't want to deal with incoming vehicles at that quarter. That could be the case. That's speculation on my part. Now, recently, not this quarter, but the previous quarter, Rivian told investors that they adapted their agreement with Amazon. Previously, their agreement with Amazon for the electric delivery van was an exclusive agreement where Rivian could only sell those to Amazon. But since Amazon's orders of those has been lacking, they've said, you know what, Rivian, go ahead and sell those to other people as well. If people want to buy it, if other businesses want to buy those electric delivery vans, go ahead and sell them. And so that is something that Rivian has been able to do. They secured a big deal with AT&T to sell their electric delivery vans to them. And hopefully more and more businesses will look to Rivian to purchase those electric delivery vans now that Amazon has said we're not going to be buying that many early on. So more of those 100,000 orders, more of that 100,000 vehicle order will be spread out throughout the next several years instead of it being front weighted. But what's important is that those commercial vans have lower material cost due to the technology changes made in 2023. The lower delivery during the quarter negatively impacted their gross margin. So they're losing less money on those electric delivery vans versus the consumer vehicles. So the more consumer vehicles they sell, the more money they lose. Versus if they sell the electric delivery vans, they don't lose as much money on those versus how much money they lose on the consumer vehicle. So investors would prefer at this moment more electric delivery van sales from Rivian, although longer term, the bigger market opportunity is the consumer vehicles. All right, so you know how I mentioned it's going to be a big gap between where Rivian is now and the gross profit positive for Q4 target. So the CFO of Rivian gave investors a sort of step-by-step guideline to how they're going to get there. And the CFO saying how we bridge the gap from Q4 2023 to where we expect to reach modest gross profit in Q4 2024. The largest driver, which is approximately 50% of the bridge, is our plan to reduce variable cost per unit. That's going to be accomplished through material cost reductions as part of their second quarter 2024 shutdown. So they're going to shut down their manufacturing facility and upgrade so that they can implement these lower cost initiatives into their production facility. And that's going to lead to 50% of the improvement in gross profit. The second part is going to represent approximately 35% of the bridge is through focusing on greater efficiency through production facility. So as part of their shutdown, they're increasing the R1 line rate by approximately 30% to more efficiently produce these vehicles. That's going to bridge the other 35%. And then the final piece, which represents about 15%, is scaling their non-vehicle revenue. These types of revenue are more profitable. With more than 70,000 vehicles on the road now, they have an opportunity to increase revenue in areas such as regulatory credits, accessories, servicing, remarketing, and software services. These are all higher margin, gross profit positive businesses that will lead to incremental improvements in the company's gross profit. And that's going to be the final 15% to bridge that gap to reach that Q4 positive gross profit. So the biggest thing is the shutdown in Q2 and the improvements they make there. So in the second quarter report, when we hear that, we'll probably get that report around June. We'll know with a lot more certainty whether or not Rivian's going to hit that Q4 gross profit target. And if management acknowledges that they are going to hit that target during the middle part of the year, that could be great news for Rivian stock investors to look forward to during the middle part of the year when they give you an update on those improvements in their manufacturing facility after the shutdown. Management might not wait until the second quarter results come out to give investors that update on the progress in that facility. They may choose to inform investors through other means, through a press release, maybe through an industry conference where the CEO or CFO attends and they choose to disclose that information during one of those investor conferences. But I'll be paying close attention to Rivian. It's one of the companies that I follow closely. So as soon as I hear anything about that, I'll make sure to inform you because that's going to be a big deal this year. That's going to be the major factor, the major catalyst that could lift Rivian's stock price. That along with the production number. They've guided to 57,000 units for 2024. If after the first or second quarter they update that with an increase, that could also lift Rivian's stock price. But I think more importantly, it's going to be the goals along the lines, the milestones along the lines to hit that gross profit margin positive level, because you saw just how big their loss is, losing 43,000 per vehicle. That's a lot. You want to get that right before you increase production. You want to get that right before you increase sales. What's the use of increasing sales if you're going to lose 40,000 on each sale, right? You want to fix that before you try to increase sales. At least that's what I would want from a company that I'm investing in. I don't own Rivian stock. I'm not interested in owning Rivian stock. I think it's too expensive for its prospects, given how much money it's losing and given how difficult it's going to be for it to reach these goals. So I'm not personally interested in purchasing this stock, although I do find it a very interesting company and one that I'm following closely, and I have been following closely for several years. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.